Ather Energy's IPO filing, catching up with Ola Electric in the EV race. A month after Ola Electric made headlines by going public, its older but smaller competitor, Ather Energy, has also filed for an initial public offering, IPO. Founded in 2013, Ather had an early start, but Ola Electric, which began operations 4 years later, has quickly outpaced Ather in sales. According to Traxon, Ola Electric raised $1 billion over 14 funding rounds before its IPO, while Ather raised $502 million across 19 rounds. This stark contrast highlights their differing approaches. However, Ather's decision to go public signals a shift in strategy as it aims to accelerate its growth. Ola Electric's aggressive pursuit of scale is reflected in the financials of both companies. While Ather led in operational income in 2021-22, by 2023-24, Ola's revenue surged to 3 times that of Ather's. While Ather's revenue shrank, Ola's grew by over 90%, as revealed in their draft IPO papers. Vehicle registration data from the government's Vahan database tells a similar story. Between April and August, Ola sold 297,789 vehicles, compared to Ather's 73,497. Ola and Ather face stiff competition from legacy players like TVS Motor and Bajaj, who are also pushing into the electric vehicle, EV, space. Ather's relationship with established industry giants is unique. Hero MotoCorp, a two-wheeler titan, holds a 30% stake in Ather and has entered a partnership to create a shared fast-charging network across India. This collaboration is a strategic advantage as India's EV market heats up. The disparity between Ola and Ather stems from the different strategic paths each company has taken. Ola, positioning itself as a scale player, accelerated its entry into the market by acquiring Amsterdam-based Tergo BV to launch its first product. However, rapid growth came with challenges. Customers have raised concerns over faulty products and poor service, with a recent incident involving an unhappy customer setting fire to an Ola showroom in Karnataka. Ather, meanwhile, has grown at a slower pace but earned a stronger reputation for quality, thanks to its in-house product development. Ather's consistent increase in research and development, R&D, spending contrasts with Ola's 24% drop in R&D investment in 2023-24. Despite this, Ola's R&D budget remains larger, and it continues to invest heavily in talent. Ather plans to use part of its IPO proceeds to further boost its R&D efforts. Although Ola Electric is widely perceived as having stronger marketing, Ather has actually been outspending Ola on marketing for the past 3 years as it seeks to expand its market share. Ola's dominance primarily stems from its larger manufacturing capacity and direct-to-consumer online sales model, which allows it to reach customers across the country. In contrast, Ather's traditional showroom-based model has resulted in slower growth, with most of its sales concentrated in South India. In 2023-24, 68% of Ather's sales came from the southern region, followed by the west at 16%, with the north, east, and central regions accounting for much smaller shares. State-level regulations will continue to play a key role in shaping the future of the EV industry in India. Policies such as Karnataka's electric bike taxi initiative and Delhi's commitment to transitioning ride-hailing and delivery companies to electric bikes by 2030 could significantly influence the market. When the government withdrew FAME II subsidies, it impacted sales for all EV manufacturers, but Ather and Ola are positioning themselves for long-term growth. In China, the EV market continued to thrive after subsidies were removed, driven by factors such as the total cost of ownership and improved infrastructure for charging. Similar factors could drive EV adoption in India, where electric two-wheeler sales have grown from 1.12% in 2021 to 6.2% by September 2024. According to McKinsey, this figure could rise to 60 to 70% by 2030, presenting a huge opportunity for companies like Ola and Ather that are investing in scaling up production. While Ather's manufacturing facility in Hosur is currently running at just 30% capacity, the company plans to use its IPO funds to build a new facility in Maharashtra, signaling its ambition to scale. Both Ola and Ather are betting on the rapidly growing EV market, but Ather's IPO marks its determination to challenge Ola's lead in the race to dominate India's electric vehicle future.